I am going to record this, so just be aware. If everybody could stay muted once we get started, just because we have quite a few people on. Lou, if you can monitor the chat as things pop up, just if there are questions with anything that I'm covering, feel free to ask those in the chat so that it's not something that you have to wait until the very end. I do have a little barky dog in the background that will be disruptive no matter what. But so I will try to keep him calm. It's my son's dog. He's my arch nemesis, but I love him dearly, of course. Okay. I think I'm going to go ahead and get started just because I know that I have 2 full hours of talking. I presented this morning and ended right on the 2-hour mark and didn't quite get through everything that I wanted to get. So I am going to move quickly. I'm going to talk a lot. I'm probably not going to take a break, just FYI. This will be rather informal still, like I said. If you've got a question, that's relevant to what I'm talking about right then, please, by all means, put that into the chat. I will ask questions also. When I ask a question, feel free to unmute yourself and to speak up and answer the question. It actually tends to be the same question in several different ways, just because it's applicable to the material.
Right.
Lou, do you want to say anything before I get started?
We're good.
We're good. Okay.
Good.
Awesome. So my name is Christy Dudgeon. I am with Small Business Consulting. I am a small business consultant. I'm also a QuickBooks Pro advisor and a small business owner. I teach QuickBooks and finance from the perspective of an owner, not from the perspective of an accountant, although as I've learned QuickBooks, I have obviously evolved in my accounting education and specialty as well. But you will get it from a business owner's perspective, what I think is important that you know and kind of how you approach this. I started in QuickBooks because I found myself in business 25 years ago, straight out of high school, and I had absolutely no idea what I was doing. So I walked into a women's business center and said, I need help. And they matched me up with a QuickBooks Pro, and I learned how to use QuickBooks. And so here I am 25 years later, teaching other businesses exactly what I was taught by someone through one of these awesome programs. So my life has come full circle. So that's why you're getting multiple perspectives. I have also worked in small business as well as corporations, and worked outside of QuickBooks and then back in it. So that is why I ended up here today. So an overview of QuickBooks. It is a product of Intuit. It's like they also own TurboTax and CreditKarma.com. You might be more familiar with those brands. Typically, everyone has heard of QuickBooks. They just are not really sure what it's about. It is a bookkeeping software that generates reports. Very important to keep in mind that is for bookkeeping. Often owners will try to utilize it in a way that it was not intended, specifically for like a CRM or the inventory management is fun, but an operating type software, it is not, but it does integrate with additional products and services that can connect to it that actually are better at managing those types of processes than the bookkeeping side of things. There are over 7 million users globally. I even think that's an old number. It's probably much higher than that. Which means there are a lot of people that are out there using it that have created videos and answers to questions, and there's forums and chats and Facebook groups and you name it. There are many different places that are available just by Googling to get information when a small business owner or someone is using it and they run into something they're not really sure how to do it. Most likely it does it. And you will easily find the step-by-step process on how to do something. Occasionally, I do have someone who asks a question that I run into that the software just won't do it. That is, less and less common, especially as they continue to do all these updates. But it is always a possibility that we wanted to do something amazing and it doesn't do it, right? Because again, it's a bookkeeping software. So with QuickBooks Online, this is the typical product that most people are getting into these days. It also has a desktop version as far as what they offer, but that desktop version over time is being phased out. The desktop version that everybody knew and loved from the past was, you buy it, you download it on your computer, you get to use it forever. Now even that is subscription based. So it is not quite what it used to be. So a lot of desktop users are migrating over to online just so that they can have the support and updates that are available online, plus the flexibility to literally work anywhere. Karen will laugh. I work from everywhere. I travel around the world. You generally never know where I'm going to end up. And, I can obviously maintain my life, my business, everything mobilely because the information is there and the tools are there. There are 4 subscription levels to QuickBooks Online, and really, depending on the size of company and their needs, is where they would choose what subscription level that you want. So they are Simple Start, Essentials, Plus, and Advanced. And Simple Start right now is $30 a month, all the way up to Advanced, which is $200 a month. And they vary in what they can do. They can all do the same thing, but then of course, as you grow in these subscription levels, there's add-on features that can be in one and not the other. Typically, when small businesses are starting out, Simple Start is the perfect place for them to start. It allows them the opportunity to just learn the basics of using QuickBooks before you add in all the other things that it can do. The user can upgrade at any given time. It's very simple. Actually, they would love to take your money, and they will allow you to do that. But you can also downgrade your subscription as well. So if you start in something like Plus because you think you need projects and profitability, but then you decide you really didn't need that in the end, don't worry. You can downgrade your subscription level to Essentials or Simple Start and save a little bit of money. With Simple Start, this is everything you need for basic bookkeeping to run a company. So you've got your income and expenses, your invoice and payments, there's tax deductions, general reports, receipt capturing, mileage tracking. Receipt capturing and mileage tracking most often is through the app, but you can do the receipt capture through the internet as well. Cash flow, sales tax, estimates, contractors, and you can connect one sales channel. The important thing to note about Simple Start is it is one user only. So if you have a company where there's more than one person that will be working within the finance, then Simple Start is not for you. It is important for everybody that is using the system to have their own login. It is a safety measure for the business owner. I have worked with, unfortunately, more than one business who has lost millions of dollars, not kidding, because they've utilized one user login and there was funds that suddenly are missing. I don't know how suddenly you realize $1 million are missing, but sometimes I guess us as business owners, we can be head down and not really paying much attention. And the fact that they only used one single login for multiple people, it's very hard to prove who was, obviously skimming money off the company. So Not that you want to be able to prove someone was skimming money off the company, but obviously if you can pull those audit reports and see exactly what everybody is doing, it makes it um, less opportunity for someone who might be an honest person from just one day deciding to start skimming money. In the essentials package, you now have 3 users. So business owner, internal bookkeeper, sales rep, those kinds of people all can have their own login. You can manage bills and you can enter time as well, and then have multiple sales channels if you are a e-commerce type provider. You sell on Facebook, Instagram, Etsy, Shopify, those types of sales channels. So the entering time, this might be something that you don't have because you're not with QuickBooks Payroll. So that's where Essentials comes into play. But if you have QuickBooks Payroll, time is already included in that. So you could have time in Simple Start if you had the add-on for QuickBooks Payroll. In the Plus version, all the same things. You can connect all the sales channels you want to this. You also have 5 users. You now have inventory, which I briefly mentioned before. I'm not a fan of QuickBooks inventory, just because of the time in which it takes to manage the inventory, and it's usually above and beyond what most business owners have the time or the capacity or knowledge even to do. It can work wonderfully for you. I have seen it work wonderfully, but I caution jumping into inventory right at the very beginning, because obviously if you're carrying a substantial inventory at the end of the year, that is going to cost you a lot of money in taxes. And I've seen many business owners go, I don't even know why that account has that much money, categorized to it, but I need it to be gone. So be sure that you have a true inventory strategy before you jump into that one. Plus, there's also project profitability, which is by far the coolest feature if you are a service company or you provide, different types of events and things that you want to actually see the profitability of a single job or a single project or a single event, because you can define these by the customer, and then you can put all the materials, the labor, any of those direct costs specifically to that project, and truly see if that project is performing the way that you wanted it to outside of the entire company profitability. Advanced is the top. This is the one that's $200 a month. This is scaling up, obviously, in the size of the company. So now we have 25 users here. This is when we've got separate finance personnel, separate sales personnel. We've got our C-suite people. This is big. It also has the most features. So even if you don't have 25 users, but if your business is doing, multiple things that you need to be able to see these reports in a certain way, or you want things to be automated and you want custom accesses and the ability to batch, and potentially you have employees that, are paying for things. So there's expense reimbursements happening. You can do all that with Advanced. It's quite massive and robust, and really there's some cool features in there if that applies to your business. So with every subscription level, there is the QuickBooks app, and the QuickBooks app, by far the most awesome feature for most small businesses. I am guilty of being the person that will buy something, the receipt sits in my car, and then eventually I throw it away. So to overcome that, QuickBooks app allows you to enter that expense right then just by taking a picture of the receipt. The receipt then is saved forever in the app, and it's not like you have to take a picture of the receipt and then connect it to the app. It is literally in the app that you're taking the photo. You're saying what that expense is right then, and then on the back end, when you're finalizing your monthly reports and things like that, you're actually approving and accepting those receipts that are coming in. So that's not just you, that's also employees that have access to the app. And that's where that expense, the employee expenses and things like that come into play. As long as they have a login, they have the app. So this could be, as you can see, just about anyone. There is a lot of things that you can do on the app, including creating invoices and adding customers and well beyond the expenses. It also tracks mileage. So if you are in the field a lot and you need to make sure that you're tracking the mileage on your personal car, which a lot of us business owners are, then you can track your mileage on this as well and get that report for the IRS. So all cool features that happen there. So talking about QuickBooks setup and best practices, this is what you will receive when you ask Google the question, how hard is it, how hard is QuickBooks to set up? QuickBooks is user-friendly, right? There's tons of training resources. And actually the setup part of QuickBooks is super simple. But using QuickBooks is much different. So if you've had no prior experience with accounting or bookkeeping, it may take several weeks or months to become proficient in QuickBooks. Accounting professionals and bookkeepers, they're trained in this, right? Most business owners are not. When it comes to maintaining finances and understanding, where things should be categorized and how to pull the reports or even what report to pull, this is all new information. And so there's a lot to learn. So I work with a lot of clients that end up in the program because they are so frustrated by QuickBooks. In fact, I was talking to a client yesterday and she goes, is talking about needing to get organized in her business. Like we know we have to do this, right? But I just I never took the time to figure it out. Never took the, and that's, that's our lives, right? We have so many competing interests, so much competition for our time that we just never really are able to carve out the time to truly get to know something. That doesn't mean we don't do it. I guess in some cases that means we don't do it, but there are many people out there that we can align ourselves with as a business owner to make sure this is taken care of. And I'll talk about that a little bit more. So what to expect when I set up QuickBooks Online, the setup. I answer a few questions, I connect my bank accounts, and then I'm on my own. That's literally the setup of QuickBooks. If you've ever walked anyone through the process or you've ever done the process yourself. This is how everyone ends up. Not everyone, but the majority of people end up, because you've now answered these few questions. You all of a sudden see this dashboard. Things are feeding into your bank accounts and you don't know what to do with anything or where to go. That's where hopefully an advisor or a consultant comes into play, a connected bookkeeper through QuickBooks, or all of those various resources that are available just by Googling what your question is. So we go back here to how hard is it to set up QuickBooks, right? I said the setup is so easy. Answer a few questions, you're on your own. It's the part of understanding the accounting and bookkeeping that I like to dive into, because it's completely skipped or ignored in the setup of QuickBooks, right? QuickBooks itself is a software company. They're not accountants. Well, they have some, but they're not necessarily there for the accounting part of things. They're there for the software part of things. So getting to know your chart of accounts, it's different than having your head on fire on your keyboard. Now, the chart of accounts is something that during QuickBooks setup is not even mentioned. It's not even discussed, doesn't even tell you where it is, doesn't even tell you to go there or to look at it. Yet, it is the single most important aspect of any financial record keeping. Every single thing you do in any financial software is touching your chart of accounts or general ledger, it may be called. Those terms are interchangeable. So once a business owner knows and understands their chart of accounts, they will be a lot more successful and confident in what they're doing. A big frustration is with everyday categorizing and not knowing if they're categorizing in the right thing. I've found that if you start out with not linking your bank accounts during the setup and going to your chart of accounts, understanding what's in there and learning it, that business owners don't become as frustrated down the line when they do connect their bank accounts then and start categorizing. It's not unfamiliar to them what those categories are or what those accounts are. So the chart of accounts, as I mentioned before, I approach this as a business owner perspective. I don't have a lot of time. I probably am not the greatest on keeping up on this every single day. So I don't want opportunity for error. I don't advise anyone to have an overcomplicated chart of accounts, because otherwise that just opens up for error. And if I have someone else that is on my team that's also in my QuickBooks, I am eliminating creativity that potentially can happen when I have accounts or things within my chart of accounts that could be, if I think it could be this and someone else thinks it can be this, then we lose the consistency and the entire, meaning behind what the chart of accounts is in the first place. So always keep it simple. Don't overcomplicate it. If you've never looked at a chart of accounts before, or you have absolutely no idea what I'm even talking about, one of the first places to stop and to look is at your Schedule C. If you're a small business, you probably have filed a Schedule C with your taxes before. If you're a LLC, sole proprietor partnership, you're going to file that. And it's going to give you inspiration. As far as how complicated your chart of accounts may look versus how simple it could look. And the reason I say that is when you go through the QuickBooks setup, it will be complicated. It automatically overcomplicates the entire situation. And it's got a bunch of accounts in there that you probably don't need or even want. And that's why I like to back things up and go to the chart of accounts first before you ever jump into doing anything else in the system and trying to make our lives a little bit easier. So we do that by inactivating accounts. You cannot make a mistake with this. You can, but you can overcome it pretty easily. You're not deleting anything, you're just inactivating. So if you inactivate an account and need it in the future, all you have to do is make it active again. The best time to do this is when you first are setting up QuickBooks, because if you inactivate an account after you've already categorized something to it, then it's going to show as deleted on your reports. And once you see it on a report, you'll know exactly what I'm talking about, which means you just go back and you activate it again. You can reclassify those transactions if you really don't want it. So if you start off with QuickBooks right out of the gate, and the first thing you do is simplify your chart of accounts, you will thank yourself for that in the future, by not having as many options for all those errors that I was talking about. They can even be up to 250 account lines. Sorry about the dogs. My son has arrived. You could even have 250 accounts in there where if you look at your Schedule C, you probably will notice there's maybe 30 max. That is really, at the end of the day, what you're narrowing everything that you have categorized down into in order to file your taxes. So it's always good to be familiar with what the IRS is actually asking for from a category standpoint. So the chart of accounts, there are 5 things that you need to know. Only 5 in order to be successful in managing finance. Those are assets, liabilities, equity, income, and expenses. Just those 5. After that, it gets complicated. You can overcomplicate every single step of this. There are some accounts that you absolutely need and will be required to have in QuickBooks. There are also, like I said, a lot that you don't need. So assets are the very first top of the list in your chart of accounts in QuickBooks. And these are things that you own. They all have value. These are things like bank accounts, accounts receivable, undeposited funds, vehicles, buildings, etc. So these are physical, monetary type things. Even though the bank accounts, they're in a bank. It's there. Accounts receivable are clients, if you do invoicing, that you've invoiced, they just haven't paid you yet. That's still considered an asset. And obviously it can be called at a later date. So there's value to the company in that. Liabilities are things that you owe. They have value. Unfortunately, usually a negative value, right? Because it's a liability. But these are accounts payable. So I've entered bills in QuickBooks and I now have a payable that is created that I owe to someone at a later date. These are credit cards, these are loans, these are tax liabilities, whether it's sales tax or payroll tax, depending on whatever state you're in. If you have employees on payroll, then obviously you have payroll liabilities, but that could vary based on if you're using a third-party payroll or if you're in QuickBooks or you're doing it yourself. This is where all those layers come in. But if you don't have a third-party payroll system and you don't pay anybody payroll, then obviously you do not need all those payroll liability accounts to come into QuickBooks. Then we have equity. So equity is the most confusing, most misunderstood, often ignored part of our chart of accounts. And also, since you're never directed to go look at your chart of accounts, you don't even realize it's there. And you can accidentally utilize it thinking you're using it in the right way, or you are misusing or miscategorizing things that actually should be in equity. So this is the value of the company to the owner specifically. It has value also. And this includes things like opening account balances. So if I started QuickBooks today, and I have accounts that are already in existence, they obviously already had a balance to them when I started, right? Either positive or negative. Same thing as if I enter a loan as a liability today, there's a payoff amount that already exists. And it may be different, it should be different, right, than when I got the loan, unless I got the loan today. So those are our opening balances. And then in QuickBooks, it's the 2 equity accounts that will show up. There might be more than this, but the 2 main ones are owner's investment and owner's pay. Sometimes it'll say owner's pay and personal. And there can be a lot of time spent on this. I've had classes where there's a lot of questions about equity. So if you do have a question about what I'm saying in here, feel free to put it in the chat. But an owner's investment is any personal funds that you are contributing to the business. So this is either you've started the business and you have to, the startup capital, if you're not funding it through a loan source or, something else of that nature, that's your personal money you're putting into the business. Most small business owners, we do this all the time because that's the only place our money can come from. The company hasn't started generating money or income, right? So also with owner's pay and personal, instead of paying ourselves as a payroll employee or considering it as an expense, we as owners can pay ourselves through owner's pay, which is an equity, and it doesn't affect our profit and loss for the company. The and that will only be, as mentioned, the whole purpose of it is the value of the company to the owner, right? So it's not the value to someone else. It's not affecting our profitability. This is just what it means to us. We can pull all the money out of our company and still be extremely profitable, right? Because we were pulling it out as equity. We're not pulling it out as an expense, which is how we should be acting as owners. There are limitations to this. So if you are in the corporate structures, you're considered a shareholder, not an owner, and shareholder distributions and, things like that obviously look a lot different than owners pay in personal. So just make sure you are right in the right business structure before you pay yourself with equity, right? So why are these three important? Why am I talking about them so much? And why does it say the balance sheet at the top of this slide? So the balance sheet is a very important report, typically has to do with, any kind of funding, investment, banking. Business owners get asked for this. I often receive clients because they've been asked for it and they have no idea. They may be QuickBooks users and, all they're familiar with is income and expenses, and they had no idea this thing called assets, liabilities, and equity until someone asked for the balance sheet. It is the second most important, at least in my opinion, and most report for a business. Its formula is assets equal liabilities plus equity. It's always in balance. That's why it's called a balance sheet. And it's very important to review it. Like I said, it's critical when requesting some kind of funding or investment, and being familiar with it prior to when you're requested for it can ensure that your books are being maintained properly and that things are in the proper accounts when it comes to assets, liabilities, and equity. You can see the value of all of these when you're in your chart of accounts because they have value. You don't necessarily have to pull the report, but it's important to look at the report because it's literally a click of a button, to make sure that assets are positive and that liabilities are in the right spot and that the equity is in the right spot and that the accounts are aligning the way that they should, at least on the balance sheet. When you're in the chart of accounts, we're going to talk about inactivating here in a little while, but you can add new accounts too. And it is a very common pitfall that business owners that don't understand the chart of accounts in the first place will go in and add an account and they'll just change the name or put the name in and go with it. Well, it's always going to put it as a bank account by default. So they may have bank accounts that really are expenses, and they may have bank accounts that really are an asset that isn't a bank account, right? But it's, a fixed asset or something like that, or a liability. So one of the first things I do when I'm working with clients is look at the balance sheet and profit loss, and then start asking questions. What did you intend to be doing with this? Tell me more about this account, and so on and so forth. And that way, you can figure out what really you were trying to do with the account, and just change the account type and the detail type so that you've got that positioned correctly. So we've now talked about 3 of the 5 most important things and the only things you need to know in finance, right? So next we talk about the profit and loss, or income and expenses. Income, that's money you make. It is sales, it is interest earned, it's credit card rewards. It can be grants, although those are classified as other income, it's still going to be income. And funding, the actual deposit of it is, that's a liability. But anything that the business is receiving money for needs to be categorized correctly. Sales in general are income. It's money the business makes. Expenses is money that is spent. We spend a lot of money in business, especially when we're just getting started. It seems like we spend way more than we're earning. But we need to classify and capture all of that information in our expenses, not just for tax deduction, but also for future planning. And being able to understand and separate our expenses is extremely important. And that is between direct expenses and indirect expenses. In QuickBooks, they're called cost of goods sold or expenses. So cost of goods sold are direct expenses that basically means it was a cost that was directly associated with the production of the outcome or what we are being paid to do. I just had a class before you guys that a lot of the questions around direct expenses were, I have staff that come in to a kitchen and they wash dishes. And is that a direct expense or not? And my recommendation with that is to kind of break apart what is supporting roles and what are the roles that are actually producing what is being sold. So, although washing dishes is something that has to happen if you're cooking or creating dishes, but is that a supporting role or did that directly influence the outcome? So that was part of it. There was a manufacturing team that, they have an employee that pours the wax for the candles that they were selling. Yes, that's obviously direct, but that employee also will perform some administrative tasks because, that's life, right, in business. And so that employee is actually performing direct work and indirect work. So that's where time tracking and keeping track of that time is important. It's also the separation of that wax going into that candle was to produce the work, or produce the outcome. So that is something that's obviously a direct supply or material expense, where I bought paper or printer cartridges, and those are indirect because that's overhead or something that is supportive to the overall business. It's things that I had to pay for anyways, but it's not necessarily something that is affecting whether or not that candle got made. If you guys have any questions, let me know. The chart of accounts, profit and loss, as I discussed, is your income and expenses. So this is kind of how that report breaks down. It's the number one most important report for business owners. It is and should be utilized every time there's updates and changes being made in QuickBooks. I was managing a finance team, a sales team also, that was constantly making entries all day long. And so I was running my profit and loss report, multiple times a day. And that was because I was managing the work that was being done. What often gets forgotten is that nobody's managing us as business owners unless we have an accountant or bookkeeper or something that's asking these questions. What are we doing? But we do have to be managed. And so the one way to manage ourselves is truly to pull our reports and make sure that all of those fun daily transactions and categorization that we were doing is actually correct. And so when we look at our profit and loss report, we're talking about our top line income, so our net sales. And in QuickBooks with the chart of accounts, we could have multiple income streams that we have in there. We don't need to have that many. We just really need to have one. But some business owners like to overcomplicate the income line. If you sell products and services both, then sometimes you really do want to have those two lines so you can see the difference between a service and a product. So that gives us our net sales. Then we subtract our cost of goods sold, and our cost of goods sold gives us our gross profit. The importance of cost of goods sold comes into play because if you look at that Schedule C again, you've got income that you're reporting. So you got your net sales right at the top. And then the next thing it's going to ask is your cost of goods sold. And that's going to give you your adjusted gross income, I believe, is what it calls it on the Schedule C. Don't quote me on that though. But that number is actually what becomes your taxable income. So you are subtracting those direct costs and you are truly being taxed at a different level. So if you're not using cost of goods sold and you're just putting everything in expenses, you're going to lose that benefit. You're still going to end up deducting all those expenses, don't worry. But the way that it will look on the Schedule C is going to be different. So the gross profit then, minus all those expenses, like I said, ends up being your net profit and loss. And this is where that equity conversation that I was having earlier comes into play. That you don't see equity on this. Equity is not going to show up on your Schedule C, and it's not going to affect the net profit or loss of the business. You don't want to pay additional taxes on money that was your personal money that you put into the business by calling it income. And the business doesn't want to take the profit or the loss by paying you when they're not paying you through payroll, that you're just going on vacation and you decided to take money out of the company. So keep that in mind if you're not that familiar with equity. So setting up a new business in QuickBooks, super simple. Like I mentioned, you just go to quickbooks.intuit.com. It's going to easily ask you to sign up, take advantage of this. You choose your plan. The prices right now from Simple Start to Advanced, they're $30. It's Simple Start. There's those 4 different options like I talked about. You can upgrade and downgrade, and they give you 2 options when you first start out. You can either save 50% off of the cost for 3 months, and then it will go to the higher rate, or you can say you want to do a 30-day trial, which is free, although you have to enter a credit card. And that's for businesses that aren't really sure they want to jump headfirst into QuickBooks, or they are usually involved in something like today and they want to set up a business that's a fictitious business while we're going through all of this, and that allows you to have that 30-day free trial. You can cancel the subscription, and that fictitious business goes away eventually. So there is an additional offer with QuickBooks that I noticed recently that's near the bottom of all of it, that you can have assisted bookkeeping. They will try to sell you that. It's $50 a month add-on, and there are many, many other services that can be added on that are additional expenses. Don't worry, they won't let you forget about it. They will constantly be throwing it at you. So when doing setup, I'm very strategic about the way that I advise anyone to go through this setup process to somewhat eliminate, I guess you could say, the number of things that are being thrown at you right at the beginning, especially when you don't know what all these mean. But I can't eliminate them all because that's just the nature of QuickBooks, is that, you're starting at whatever is reasonable and affordable to you. And then there's all these add-ons that you can add on as your business grows or you have different business needs. QuickBooks also offers full-scale bookkeeping. Like, it's one of the things. They have people that work there that are bookkeepers. This is their full-time job or their part-time job. So one of the questions I get a lot are, I don't know, any bookkeepers, I need help. There's always help from them. I'm not saying that's the way you need to go by any means. It's just there, and obviously they've figured out that a lot of business owners, start out and realize, yes, I need to maintain my finances, but I don't have time. um, in order to fit this into my day, or that my time is best spent on something that's bringing a lot more value to the company, where this can be something that can be done by someone else, and probably at truly less expense than what it's costing the company if you're doing it yourself, based on if you've ever figured out what you're worth. So when linking your accounts, be careful of the start date. The default typically is to the beginning of the year that we're in. Some businesses or business owners think, well, I have 3 years of data and I need to go back as far as my bank accounts will let me. I caution against that, because do you really need to know each individual transaction, or is it just the information? I.e., what came off of your Schedule C or something like that? Is that the information that you really want to be able to see in QuickBooks from a comparison standpoint? So if you have data for multiple years back, then entering those as a journal entry is going to be so much less time consuming than if you have every single individual transaction in there from the beginning of time. So don't bury yourself, because it can happen, especially if you have bank accounts, credit cards accounts, and multiple accounts that you're managing every single day. I think I have 12 accounts myself that are attached to my QuickBooks. So if I started out with 12 accounts that have over 4 or 5, 1,000 transactions in them, it would take me a while to unbury myself, and it's just unnecessary.
Hey, Christy.
Yes.
Sorry to interrupt. We had a question. This is Tracy. Lou had to step off, so I'm monitoring the
Okay.
chat. We had a
All right.
question from Anne. Is the $50 an add-on the
Yes.
base charge?
Yes. And I honestly, I've never used it. I really only noticed it was there the other day. I do not know what the $50 per month is even entails. But I'm sure they would be more than happy to tell you what that is. So that you would know. I think $50 a month for maintaining, or as they call it, assisted bookkeeping, is really darn cheap. So I'm thinking there's not a lot that's probably included in that, but it might be more of they do something for you every month or something like that. So I would say definitely look into that before you jump in to truly understand what it is they're offering. Good question. So when you go to start your QuickBooks subscription or your business, a few things are going to happen. And I've tried to do this earlier, but my connection issue, me living in the country, and it being not good weather today, was really slowing it down. But when you click that, choose the plan that you want when you go to quickbooks.intuit.com, it's going to then have you set up a login with Intuit. So if you've used an Intuit product before, as I mentioned, like TurboTax or Credit Karma, Mint.com, which Mint.com, they're phasing out and going to Credit Karma. But if you've done that before, you already have an Intuit login, or if you've used QuickBooks in the past, and at least in the last several years, I would say. So be mindful of that. It may say that that your email already exists. If you've never used it before, then you're going to enter your email, you're going to create a password, and they're going to ask you for your phone number. And what then you're going to do is get a code, a 6-digit code, to verify that phone number, basically. And that phone number is key to your future with QuickBooks. So make sure it is a number that is yours, that you are able to receive text messages from, so that you can get that regularly. I use a Google phone number, actually, personally, because I feel like if my personal phone number ever changes, then, which could happen, then my Google number is always going to be the same number. That's never going to change, and it's free. So that way I'm getting that text message to myself all the time. And I don't have to worry about losing the ability to access my QuickBooks. And the reason I say that's important is because if you're trying to add bank accounts or you're trying to add users and things like that, it will constantly ask you for verification. It's highly secure, right? Because it's our financial data. So just be aware that you're going to be asked for that often. I've had businesses where, it's a husband and wife potentially, and the husband is always out in the field and the wife is in the office, but it's the husband's phone number that they utilized. And so they're literally calling each other trying to get the verification number, and that's just annoying. So don't let that happen to you. So then it's going to ask you a series of questions. My pro tip for this is only choose one and then skip for now everything else you can. It seems counterproductive, but it's really not. Every layer that you add right here is an extra layer of questions that QuickBooks is going to ask you or try to sell you something else. So really at this point, if we keep in mind, we're trying to get to the chart of accounts, we have to eliminate the fact that we're being asked to connect our bank accounts, we're being asked to add QuickBooks payments and all this other stuff. So it really helps eliminate the noise that happens through this entire setup, and it gets us to where we can really focus on what we need to focus on as a business owner when we're first setting this up. Inevitably, it's going to force you, like with this screen, to choose something. So most of the business owners I work with just choose the send and track invoices at the very beginning. Obviously, if the business doesn't do that, if they're not an invoicing company, they use a POS or it's all, sales receipt, cash sales type things, then they wouldn't even want to select invoices. They could say organize your expenses. So then they're going to say finish. The skip for now thing is really serious when you start to get in there. Really the single most important thing during this setup to have entered is what your industry is and what your business structure is, and that will be within that. Another question that will come up is this your only source of money as a business owner? I caution how you answer this because it's another question that is helping QuickBooks design your chart of accounts. The chart of accounts they never talk about, but it's going to be industry based. So you at least want the framework that you start working with to be applicable to your industry. A lot of industries are in there. You can even break down, even further to the type of, if you're retail, the type of retail that you are. Are you a bakery? Are you, e-commerce? Those kinds of things broken down very specifically. If you can't find the actual one that you want, then you say it's other, but call it retail or whatever that may be. And then the secondary addition to the chart of accounts is going to be if this is your sole income or not. And most people that I work with will say this is their only source of income. And if you say that, you might get extra items in that equity spot that I was talking about. Most recently, QuickBooks has started adding personal accounts in the equity chart of accounts. You literally do not want any personal information in your business chart of accounts. So if it says personal on it, I typically say get rid of it. Use owner's investment or owner's pay or owner's draw, whatever you want to call it. But don't break things down even more, because really your business does not matter and doesn't care what you do with that money once you pay yourself with it. Whether it's you're paying your federal taxes or you're paying your state taxes or you are paying your own health insurance or, all these different things, or if you're going to vacation in the Bahamas, and you're pulling out that money, it is still just owner's pay and personal. It is not any of the business's business, really, what you are doing with that money personally. So keep your business business and keep your personal personal. This next slide is my skip for now. I am not kidding. Skip for now, skip for now, skip for now, every chance that it gives you. And that includes connecting your bank account, even though it says it's the fastest, quickest, easiest way to manage your finances, maybe, but only if you know what you're doing. Otherwise, it can be a nightmare. So at this point, I typically don't connect any bank accounts until after we've done that exercise with the chart of accounts and we really have had a chance to actually look at things and decide what steps we want to take from a more aware position than we might be when we're looking at this setup for the very first time. So setting up a fictitious company, I'm going to skip this little part because that's all that stuff that I just talked about. It's really just those quick series of questions and voila, you have a fake company. Once we get our fictitious company set up, you have a dashboard. It's the same dashboard every time you log in. And it is customizable. So if you don't like what you're looking at, or you don't seem to be finding any value in this dashboard, don't worry about it. You can customize it and change things up as you learn more about the system. But really, a dashboard should be something that a business owner can log into and see everything they need to know about their business all in one spot. So you'll notice at the bottom, it's got invoices, expenses, profit and loss, sales. If these are the things that you want to be looking at, then be looking at them. This is slightly different than what your typical dashboard will look like the first time you log in. You normally have tasks at the top. And so the tasks will be related to the fact is, do you have transactions that have come in through the bank feed that need to be categorized? Do you have bills that are upcoming or overdue? Do you have invoices that have not been paid? Have you received money on an invoice if you're using QuickBooks Payment? It's going to tell you that on your task. So I've received the money, now I need to deposit the money, or what is it that I need to do with things? So it'll give you those notifications. Don't ignore them. That means they need to be dealt with. If you're managing sales tax, if you have to collect and pay sales tax, then you'll see that there as well, because obviously sales tax is something that's very important to be taken care of timely and accurately. Same with payroll taxes. If you are doing payroll and you are holding on to those liabilities to be paid at a later date, there's a time limit associated with that as well. This screen is a little hard to see. I am going to take a second and try to actually go online. This is a really good time to ask questions while I'm switching around, if anybody has any up until this point. Feel free to unmute and ask the question. Is everyone awake? No, nobody's awake. What are the 5 accounts that everybody needs to know and remember in order to maintain their finances? Somebody unmute and answer, even if you only know one.
Assets, liabilities, equity, income, expenses.
Yes, exactly. What report is generated from assets, liabilities, and equity?
Balance sheet.
Balance sheet.
And what report is generated from income and expense?
Income statement.
Or profit and loss, right?
Mhm.
Yep. 2 different names. It's called a profit and loss in QuickBooks. So I try to speak in QuickBooks terms But yes, those are interchangeable.
Question,
Yes.
the owner's pay, can you talk about when you are allowed to bring things out of the owner's pay, the equity, rather than just listing it as an expense item? Does
Yes.
it how does it
So,
have to be structured? When can you do that?
so you have to be a sole proprietor, partnership, or LLC business
Okay.
structure in order to be able to use that.
Okay,
When you're a partnership, it'll be called partners distributions or partners investment, because it's obviously more than one person. So based on whatever your operating agreement is how you can distribute that money when you have more than one owner. Sole proprietor, if you're a sole proprietor or a sole owner LLC, you can do it whenever you want because you don't have anybody else that you have to answer to. But typically with those partnerships, you would need to pay both partners the same amount in order to keep the peace.
does the concept of cash versus accrual counting come up at any point in time?
It always comes up.
How in the
and-
setup of QuickBooks?
so no, it
Okay.
doesn't. It's going to ask you what tax forms you file. But as far as asking you actually accrual or cash, it typically doesn't ask you that.
Okay.
But obviously it's an important setting to go in and make sure that you have set correctly, because otherwise it's going to default everything to accrual. And most businesses, at least, small businesses starting out, are not in accrual. They're typically in cash. So to save yourself some headache with having to constantly change that when pulling reports, it's an overall setting, which as soon as I get into here, that's one of the first things I'm going to talk about is
Okay.
the setting. Yeah. This makes my internet connection extremely unstable between both the PowerPoint and actually looking at QuickBooks. So I might freeze. If I freeze, I'm going to start shutting my camera off. Just be aware to try to overcome that. And if I do freeze, if someone can say, hey, you're frozen, because typically I don't know it. Okay. So QuickBooks has a sample company or a test company that anybody can access. There's a link if you Google it. You do not have to have a login in order to get into it. And you're going to see what it looks like here in a second. It is a landscape company called Craig's Landscaping that does a bunch of different things. And it's a good place to try things and test things out and not be worried about what's going to happen, because obviously you can't save things and leave. You're not going to be able to send things out. You're not going to be able to connect accounts, but at least there's data in here that you can play with. So can everybody see that? Craig's Landscaping. Yes, no, maybe.
Yes.
Good, thank you. Okay, so this looks a little bit more like what I was talking about, right? We've logged in, we have our tasks right here. The first time that you log in, or the 50th time you log in, if you haven't dealt with it, you're probably going to have a startup checklist that's going to pop up here instead of tasks. These 3 dots are your friend. So right now this is saying give feedback just because that's there. But if it's that setup menu, those 3 dots will let you close that widget and then you won't have to look at that again. Because you're probably not going to use every piece of that checklist. especially if you don't do invoicing or if you don't do certain things, they're just not your business model, then you're not going to do everything on that checklist ever. Back to key pieces of information as far as our settings. The big gear, as I refer to it with everything. The big gear is the umbrella. It's the overarching high level business type settings. Okay. This is where you would go when it's specific to how something is set up with the business, not necessarily just sales related or expense related or so on and so forth. So if I click that, you'll see it. As I mentioned before, you can upgrade, downgrade, cancel your subscription, add payroll, do all these other things. That's literally right here in the big gear, and you click subscriptions and billing. When subscription and billing comes up, it's probably not going to say anything here because I'm in Craig's Landscaping. Yeah, unable to process at this time. You'll get that from Craig's Landscaping. It will look different in your version. It will let you cancel. It will let you upgrade, downgrade, all that. But that is right there. First thing in the big gear. The other place that you will spend a lot of time is the accounts and settings. And this is also the fastest way to get to your chart of accounts. In the accounts and settings, when you were talking about accrual versus cash accounting, this is where you would specify that. Slowly it's loading. This is where you would add your logo, your company name, how you want the face, the customer facing type things to be. That's, your company email, how people would contact your company, and anything you have in here is also what's going to go to your various forms, whether it be an estimate, an invoice. You can make modifications and change things after that, but obviously most of us should have at least our company logo and our company name on there. So making sure that this information is in there is great. So we've got these few things here. Then we get to what is advanced. So it's not a sales, it's not an expense, it's not a time, it's not the general company, which is kind of bizarre because it should be. But this is where you change your accounting method. So if you are not an accrual-based business, then you can switch to cash, and therefore it will default to that, as opposed to you constantly having to change things. Anytime you're trying to do something and maybe you can't, it's likely going to be in this menu somewhere. You can see that there are multiple things that are off. Some things are on. And this is more of, I'm using the system and I'm understanding it more and more. And I've decided, yes, I really want to use that, or no, that really doesn't matter. You'll see that when you go under sales and the way that your invoices are created. Are you a shipping company and you want a shipping address on there and you can't figure out why it's not? It's because it's off, right? As well as discounts, deposits, so on and so forth. This is where in the big gear, right, that we control everything that is associated with those types of things, the system itself. So most important, as I mentioned, we need to look at our chart of accounts, and Craig's is going to be a great example of how to go about this if you're already using QuickBooks when you're cleaning up your chart of accounts. Because as I said, the best time to do this is when you first set it up, but I get that a lot of businesses have already been in there or tried to use it, and they might have a little bit of a disaster or a major one that they're in there dealing with. So when we look at this, we have our assets, right? Bank accounts, accounts receivable, current assets, fixed assets. These are all assets. Then we hit our liabilities, including a credit card that's attached here. Other liabilities, including our payables for sales tax. It looks like we've got some loan payables. There's our equity. They're not using equity the way that I discussed it. Probably they eliminated that for a very specific reason, so that you would recognize that. We've got so many income line items here. So this is when I talk about overcomplicating a situation. So many, so many, so many more. All in income. Oh my. We've only got one line for cost of goods sold though, just one, which is probably not accurate at all because it looks like, you know, they're installing and producing a lot of different income lines. They probably have cost of labor that should be in here, potentially equipment rental based on the type of company. So they are underutilizing their cost of goods sold. And then we get to all of our expenses. So you can notice how these are broken down in some of the cases. So we've got automobile here. That's considered a parent because it's all the way to the left. And then we've got sub accounts. So this is a common one. I don't consider this over complicating. If your business owns vehicles, typically we want to know what the fuel expenses on those are. So it's a very common sub account to see fuel. Repairs and maintenance might be another thing that you're going to see a sub account there. At the end of the day, the IRS wants to know what your vehicle expenses are. It's going to be one number, but it's all going to be rolled up into this parent. And that's the number that would be utilized on your taxes. These sub accounts just break out what ultimately goes into here. The reason I talk about simplifying a lot and overcomplicating is that I've seen many businesses have all these sub accounts associated with, you know, something, and they think they need them at the beginning. And what happens is you start categorizing things, and you'll find that when you're categorizing things based on our time and energy, right, as business owners, we want to then simplify things. We tend to not want to be as complicated as we make it. And we'll start just throwing everything into the parent account. Or you hire an employee that thinks similar but different, and you lose the consistency, and they may throw everything into automobile. Or they may say, no, I want all these sub accounts to break this down. Really, that's very time consuming to be breaking things down that much when it's something you maybe don't really want to know. So I would caution with adding a bunch of sub accounts and making sure that you're managing, you know, the process and the chart of accounts and how many different ways they're breaking things down, because that's taking more and more time in categorizing. I'm sorry if anybody's an accountant or a CPA on here. I always say this is how I feel like accounting personnel justifies their time, is that they create these chart of accounts that are broken down, you know, into 5,000 different ways, and that gives them, you know, all this more time to move things around. So keep it simple. We get down to insurance, you know, workers' comp being a sub account makes sense. Job expenses. So we've got job expenses. Here's one of those questions I would ask. Are these direct job expenses? Because they certainly look like it. They're probably in the wrong spot, or they're being used incorrectly. I mean, we've got sub accounts of sub accounts, right? And these all look like they should have been cost of goods sold instead of, you know, other miscellaneous service cost. And then we've got equipment rental by itself and supplies and materials. Permits, you know, permits typically are a direct cost because it's pertaining to the job and the income that's being created. The permits typically aren't blanket for multiple things. Those would be an expense that would be, you know, under licenses. So legal and professional, yes, those are broken down multiple ways. You probably don't need that either. It's going to be legal and professional. But it's all on what makes the most sense to your business. Craig's Landscaping really overcomplicates a lot of things, in my opinion, and it's not how I would advise most businesses start out until you're absolutely sure, hey, this is something I need. You know, now that I've been categorizing it, I really think I need this breakout here to truly understand what's going on in the business better. And that it can't be classified in another way within QuickBooks. So there are things called tags. There are classes, there are locations, and these are all ways to divide or break down the information so that you can actually pull reports that are much more specific than just pulling a profit and loss overall for the company. So there are opportunities to break this information down and actually get maybe what you were attempting to find. Even with the automobile expense, if it's fuel, you can tag it as fuel and you can pull a report by tag and see what your total fuel expense was, and you don't have it as an extra sub account on your chart of accounts. So your profit and loss is going to be really short. I always say the goal to a profit and loss is to keep it on one page. It's really easy to get it much, much longer than one page. But a good goal is one page. Again, reference that Schedule C and see what they're asking for. And you'll see how short that a profit and loss really can be. So to clean this up, one thing I had mentioned is be mindful if something has been already categorized to that account. So if we are in a balance sheet type account, so we've got our assets, liabilities, equity, then all of those have value. Remember when we were first talking about those? So they have a value. So you're going to see a value in here if there is actually something that has been categorized to it. This prepaid expenses and this uncategorized asset are zero. So there's nothing of value right now sitting in any of those accounts. We will see bank balance over here if we have a connected account. So this means we've linked the account to our bank, which we'll talk about here in a minute. And that's showing us the difference between what the bank says we have in that account versus what QuickBooks is saying. Common question, why do these not match, right? You know why those don't match? Well, first of all, I'm a little concerned that the bank balance on the checking account is negative $3,000. But why those don't match is that often we have transactions in QuickBooks that are not reconciled, that truly should not be in there, and we have not cleared out unreconciled type transactions. So we can get a build up, either positive or negative. This happens a lot with credit card payments and things that are applied in the wrong place. And so when we reconcile an account, we have the opportunity to clear out what is unreconciled and actually not part of that account. And you will bring those numbers a lot closer. Now, they may not be exact every day because we're constantly doing entries in QuickBooks, right? And we have constantly money is coming in to the bank, but we may have written a check and of course it hasn't cleared the bank yet. So those numbers aren't going to jive, but the goal is to keep them close, not to keep them far apart, which right now we're $4,000 apart. There's something that would raise a red flag for me. Same thing with the savings account that's 800 and 200. You know, why is QuickBooks showing 800 when really there's only $200 in the bank? That's overinflating or overstating your balance sheet, because you say you have $800 in your savings account when really you only had two. So from a funding standpoint or investor standpoint, your numbers are not accurate and they're not reliable. So if you ever had to defend them, or you don't gain funding or something like that, then it's very possible that your numbers weren't accurate to begin with. So this person has decided that they wanted to use inventory of some sort. Probably was a nightmare and they stopped doing it. And they've only got $596.25. So inventory I've seen work awesome in a warehouse type setting. I have seen it fail miserably in a landscape type of setting. Just because of what someone was trying to inventory, like mulch or sand or something that's very hard to measure to begin with, and often recorded, inaccurately by the people that are actually using it. So with prepaid expenses, I've already said I'm cash. I don't have any prepaids, I'm not prepaying for things in advance. And I don't need this account, right? So I talk about cleaning it up. I just go over here to this little guy I call a carrot, the little drop down, and I make them inactive. It's checking. It says, are you sure? I say yes. Gone. There are accounts in QuickBooks that you cannot inactivate, no matter how many times you try it or really want to. And those are usually the ones with the name associated with them. So uncategorized assets, undeposited funds. These are standard or static accounts that QuickBooks utilizes, especially when it has absolutely no idea what you want to do with something. It's been uncategorized, right? So if I try to do that, don't worry, it will warn you. You will know that you can't do that. So I get that same warning. I say yes, and it will say failed to inactivate. No big deal. I come over here to my truck. Let's say I deleted it just for purposes that I was discussing, if it's got money associated with it. I say yes. It's telling me that the sub accounts will be inactivated too, because I am inactivating the parent. It will remove from the account categories, yada, yada, yada. You can make it active again later. I'm unable to inactivate it. It didn't even want me to, no. It's like, nope, you can't do that. Nice try. If I come down here to the original cost, the fixed asset, let me see if it'll let me do that. It is. Okay. So I got rid of that one. That was an error. It had monetary value to it. So I come to then little gear. So we talked about big gear is the overarching accounts and settings for the entire company. Little gear is the settings specifically associated with what it is you're working on or what page you're on at that time. So the little gear will change depending on where you are. Right now, I'm in transactions, which is technically the whole thing over here. And my little gear is associated now with just the chart of accounts. So you'll see when you click it, you only have things that are about the chart of accounts. Looks very different than the big gear. One of the boxes that you will want to check if you make a mistake or you decide at a later date, hey, I really need this account. I want to see if it's in here before I add a new one, right? And if you can't see it, it's because you inactivated it, right? So all we do is check the box to include the inactive, and we can bring these all back. You can see my prepaid expenses. You can tell that they are inactive accounts because they have this deleted here. Even though they've not been deleted, they're just inactive. And all you do to bring them back is click make active. This is a very simple process. So this is why I say, if you're not using it right now, today, and you're worried about, well, I may use that in the future, you can see how easy it is to activate it when you actually do need it potentially in the future, as opposed to having it right now.
Hey, Christy.
Yes.
I'm sorry, it's Tracy again. We have another question in the chat, and it came through a couple minutes ago. I'm sorry, I'm going to have you back up just a small amount. Matt had a question about simplification. Can you delete default categories within QuickBooks, like travel, meals, that type of thing?
Yes. So that's what we're talking about, is inactivating, right? So it's an account that we don't want, we don't need. We're inactivating it, not deleting it. So yes, 100%. The number one homework item that I always have clients that I work with, the very first thing we've gone through the setup is now you clean this up with a fresh perspective on what you're looking at. You grab your Schedule C, you come over here, you look at it. Maybe this automobile, right? I'm a business. My business doesn't own an automobile. I own one, right? This is typically how we start out, but my business doesn't own one. So therefore this automobile expenses don't apply to me as a business. So I'm going to come over here and I'm going to inactivate it. And it's gone. So this original cost right here, remember I deleted that. We want to make that active. Unfortunately, when I deleted it, I also took out the actual original cost of that vehicle. So I would need to go back and do that. So important note though, if you are in QuickBooks already have been categorizing things, remember how I said we have accounts that have value? Well, you didn't hear me say that about income and expenses because these don't actually have value. They're just a classification of something that you've already valued. So typically out of something in a bank account is what you are categorizing. So in order to do this process, if you have already been working in QuickBooks, you have to pull the income statement or the profit and loss to ensure that you are not accidentally inactivating accounts that have a value or have been categorized to, not a value. Sure. So to do that, I go to reports and I choose my profit and loss right at the top. And I can see automobile deleted, right? I just did that to myself. If you remember, I inactivated. So I look at this and I go, okay, did I really want the automobile account, or is what I actually said was an expense to the business just something the business paid for that really is my expense? And using this QuickBooks is all you do is click it on the value. It's going to then show you the value of what is in that. They now have modern view. QuickBooks just updated this, things changed from the old view to the modern view, but I can see here, looks like I was getting some car washes or something, and the business was paying for those. Now, maybe I do want to call that a business expense. Probably not. It's still probably a personal expense, depending on ownership of the vehicle. And especially if I have mileage deductions that I'm taking with the IRS, then I don't want the business to be paying any of my automobile expenses because that would be inappropriate to account for those expenses and then also take the deduction for the mileage. All right, to alter that report, you scroll up. So we have, now we're going to get something they're going to try to sell to us, I think. Maybe. I'm just going to close it. With our introduction, getting things done, business overview. Another thing to understand about QuickBooks when you first get into it is that there are almost always two ways to get to what you're trying to do. And often there are three. The path you take at the beginning is most likely the path that you're going to stick with because it's what you're comfortable with and you know. One of the most forgotten and easiest ways to get to where you're going is this bubble up here that says plus new. It is, you know, one of those things I will sit with clients and I'll say, just hit plus new. And when we do that, we can see everything that comes up. So this is every transactional thing that we're trying to do in QuickBooks. You know, we're adding an expense, an invoice, we're receiving payments, we're doing payroll, we're depositing, we're transferring, we're making a journal entry. It's all right here. And it is the quickest, fastest way to get there. The menu to the left-hand side that is in gray, it is so difficult to realize it's still there when you're looking at the web page. I just know this from experience with working with so many people that when I tell people to go to the left to the menu, they often stop here and they'll just keep saying, I don't know what you're talking about. So this menu, if you look at what happens if I go to transactions, because transactions is where most businesses spend the most of their time, right? Because we're constantly categorizing transactions and things. If I click this, is it going to show me this now? It's probably not. Yes. So if I click this, I have a sub menu that pops up. This sub menu happens to also be exactly what is up here. So this is when you get multiple options to do the same thing. They just look different. So whether or not you choose to take this path to truly get to your bank transactions after you're already in your chart of accounts, or you come up here, it's not wrong. It's just there are multiple options to do it. So be mindful of that as well. There might be a faster way, but there might not be a more comfortable way. So that step that I have you skip in this setup, you know, right? When I said, don't link your accounts, even though QuickBooks right off the bat will say, okay, let's link your accounts. Let's first talk about the chart of accounts. Let's clean that up. Let's inactivate things that are overcomplicating our lives. We now have looked at all of those accounts, right? We now know what our assets are called. We know what our liabilities are. We know what our equity is. We know what our income is. We know what our expenses are. And so we are now prepared to come over into the world of categorization and to start actually breaking down this information. So if you are a proactive accounting person, so there's two types, right? We have proactive and we have reactive. It's like everything in life. Proactive would be, we write a check, we enter it in QuickBooks. We have an expense, we enter it in QuickBooks. We invoice our customers, we receive our payments. There really is no added benefit to linking a bank account if you're already entering everything up front. It's just a checks and balances. So you can choose whether or not you want to do it. It's not a requirement. The pitfall is that it's so easy to just connect accounts and to categorize here, especially if we set up rules, that we all become reactive. And from a business standpoint, that's not really helping us with understanding the cash flow of our business, because that's back to the principle of, I look at my bank account, definitely not my checking, I have no money, but I might look at this and it might be $3,600, right? And I might say, okay, I can go ahead and go buy that thing that I wanted. I've got money in the bank, when in theory, I don't, because I've overspent and now I'm really negative 3,600. I just didn't realize that because those checks hadn't cleared the bank yet. Or, you know, that I accidentally used my debit card yesterday and, you know, that processor hasn't cleared that account. So, the more that we can enter on the front end, and then potentially have matching records on the back end, the better it is to help us manage and maintain our finances. In order to link our accounts, after I told you can't, right, is that you just come into bank transactions and you click right here where it says link account. This is where you manage your connections. There is a caveat to the linking of the accounts. I don't know that it's gonna pop this up. Maybe it will. No, it's not gonna let that happen because it's Craig's Landscaping. But not every bank is going to connect with QuickBooks. A lot of them are. The majority of banks out there, especially the big ones, are all going to have the ability to link with it. Credit unions tend to not play nice with QuickBooks. They have different security levels, and sometimes you can actually get the credit union to connect, but you have to go to the credit union directly to have them give permission. It's just an extra step. And in that case, if you notice where it said link account, you might be uploading from a file. as opposed to linking directly. So really you're downloading your transactions or your file from the credit union. You're downloading that into a QBO file, which is a QuickBooks file. Most banks that even don't connect will have that form of a file that you can download. Or you're downloading it into a CSV file that is formatted accurately and then uploading it into QuickBooks. So you can still get those daily transactions and individual transactions in here if you really want to. It is a couple extra steps, and that's purely because the bank either allows it or they don't allow it. So once the bank allows it, so the screen that pops up looks different. You just type in your bank name and it's going to ask you for your online banking password and username. That's how those connections happen. It's basically just online banking. It's then going to ask you to verify who you are. Remember, I said that before. That's the security measure. You're going to get that code and then you can enter it in there and it will let it happen. Now, with bank connections, you now are dealing with security not only on QuickBooks side, but the bank itself. So expect those to be broken often. So I don't know about your guys' banks, but I have a bank. I actually bank with Huntington for most of my stuff, but Huntington will break that all the time. And all I have to do is re-log in and reestablish that connection. It actually makes me feel good that Huntington is paying that much attention to security, but there are other banks that don't quite do that like Huntington does. So when you come in here, I now have 3 accounts as Craig's Landscaping that are linked. The reason I know they're linked is because they're listed right here. I can either look at them from this perspective, or I have this drop down, which gives me that same information. It's all in what I'm most comfortable with, which makes the most sense. Do you like lists or are you visual? These numbers that are listed right here in checking, it says number 25. That's telling me that I have 25 transactions that I need to review. And they're all listed here. If for some reason I did not change my start date to a realistic number, this is where I mentioned that you could have hundreds or thousands of transactions that feed in here that you will then have to categorize. You can either categorize them or you can say, oh my, I made a mistake. Check that top box and say exclude it. If I exclude it, it doesn't mean it went anywhere. It just meant that you excluded it from your bank register in QuickBooks. Basically, you're saying, I made a mistake. I don't want to deal with it. If I didn't want to deal with 2013 transactions, or 2013, wow, what year am I in? If I didn't want to deal with 2023 transactions that I really only intended to start with 2024, I can still click that box, but I can uncheck my 2024 transactions, meaning I'm going to exclude everything prior to 2024. That number got lower, and now I only have these that I have to manage and deal with. When you're categorizing in this screen, these are also important to note. So you have for review, you have categorized. This is basically everything I've categorized. It's now been added to my bank register. And then I have all those excluded. So nothing is lost, nothing is gone. If it's a feed from your bank, it's always going to be here in one of these 3 categories. And that's just based on what you've done with it. If it's something that you have actually added to your bank register, so if I look at Books by Bessie, this is money that came in. Right now it has it as uncategorized income, right? Because I have never told QuickBooks what to do with Books by Bessie. This is my first time using it. It's not even thinking for me yet. So if I go in here, I'm going to show you why it's important to eliminate that overcomplication of your chart of accounts. So here I'm categorizing books by Bessie. You saw that all I did was click the line. That brings up this part of the screen, and I will immediately, because this is what we all do, start scrolling through this giant list, trying to find what I'm looking for. You can save yourself some time by just doing backspace and start typing. If I wanted sales, that's what I was looking for. So I started with SA. That list got a lot smaller, and I can easily pick the one I'm looking for. So if I switch that to sales of product income, I can then add it by either clicking up here or down here. There, I have added my first piece of information to my bank register. This business obviously has multiple pieces of information that have already been added. So that does not apply. I'm going to undo these transactions here because there's a couple important points to make so we can review them. And that is when you get down to here and you have these items in green. So QuickBooks is very intuitive. It likes to think for you. It is not right. I'm not saying it's always wrong, but often it is not right. You might log in here for the very first time and have transactions that came in and they may already be categorized for you. Don't just hit add. Make sure that they are actually categorized to the account that they should be. If these didn't say uncategorized expense and a rental said something like office supplies, that's probably going to be wrong. But it is something that you can update and change just by clicking the line and changing that account. If I go to these that are green, I can see that my friend Pam Sites here, I paid Pam $75, and it says that there are two matches that it's finding. Now, the way that QuickBooks matches things is it's first based on the value, so $75, and if it has not been reconciled within QuickBooks. So it's still an open transaction that hasn't been fully reconciled through. So therefore, it could potentially be matched to this. Now, matching, this is the reason I say check this. Even if it's this one down here that says one match, you'll see when I check this or I click that to go in there, it gives me two options. One of them has nothing to do with the description that's coming from the bank, right? I've got Pam, but I've also got books by Bessie. Now, one of these might be right. Neither of these might be right. And that's why looking at them are important. It is important to note that this description right here is coming from your bank. You cannot update it or change it. The payee on it is a guess unless you've already categorized it and said, you know, if it's a similar transaction and you've said that it was Pam Sites before, then, you know, these may or may not be correct. A perfect example is in my world, we have a Rural King, and QuickBooks automatically makes Rural King Circle K as the vendor. I don't know why. I think it's the K. It's something. It's picking up something that automatically thinks that's what it's supposed to be. So I constantly have to change it. I actually set up a rule with Rural King to make sure it doesn't do that anymore, because otherwise it's just more work that I have to do. So looking at that, I'm going to say, okay, this is Pam, clearly, and not Books by Bessie. So I'm going to call that a match. That means I have put this information into the computer already, right? In QuickBooks, I did my plus new and I created an expense. Therefore, when it came in to the bank account or through the bank feed, it recognizes the fact that there was a $75 transaction to Pam Sites, that might be the same thing. That's how I prevent duplicating something. Because I could have said, nope, just add that. And then I've got my old transaction and I've got my new transaction. Remember how I mentioned if you're not doing reconciliations and you're not clearing out things that are duplicate like that, or all those extra transactions that really weren't on your bank statement, then that's how that QuickBooks account can get so much higher than what your bank account is, or so much lower in that case. I see a question that popped up. So the question is, how do you handle credit card purchases when you get the monthly bill? Do you have to go into each transaction and somehow categorize? And how do you do that? So great question. You handle your credit cards, however you want to, but the exact same way that you handle a bank account is how you can handle the credit cards. So up here, you see we have a MasterCard as one of our options for our accounts. So if I click MasterCard and I turn it blue, that tells me I'm now on the MasterCard and not on the checking or savings account anymore. And I have 7 transactions that I need to categorize. So if I'm waiting till the end of the month and I've done nothing, then, I could have a lot of things here, depending on how much you use your credit cards. And I categorize each and every one of those the exact same way that I did the main bank account. Now, the other way that I have seen a lot of businesses do, and it's really what the reason I said, however you choose, is that when you have multiple employees that are on the same business account, right? We just have cards that are in each of their names. Going in and doing each of those individual transactions from an administrative standpoint can be really tedious and also questionable sometimes, right? Because then you kind of have to get yourself in the employee's brain because nobody has kept that information, or it's so obvious, like Bob buys fuel all the time and occasionally he buys some automotive parts, and you could tell that by the descriptions that are coming in. Instead of entering or having this feed coming in here so that I have to categorize, 25 fuel transactions or, something else, you can group those directly from the statement, basically add up the number and do one expense entry for fuel and one expense entry for automotive parts, rather than do each of those individual transactions. You can do the exact same thing on your bank account. That's more old school. As far as entering things, it's harder to reconcile because, you're not going line by line individual transactions. So it's really whatever makes the most sense to you and what you're most comfortable with. Did that answer your question? Hopefully. Oh, look, I have, I don't know what just happened. I have never set off fireworks before, so apparently that was a good thing. Okay, so back in here, these are the 2 or 3 main steps that get you started in QuickBooks. This is definitely more of a deeper dive than what you get with your initial, QuickBooks setup, as far as answering those questions. So keeping everything as simple as possible, being able to right out of the gate go into your chart of accounts, know how to get there, know how to inactivate things, looking at your Schedule C and keeping your life less complicated, and then connecting these bank accounts if that's the way you choose you want to be maintaining your finances. There's nothing wrong with it other than it's reactive, and diving in here to start categorizing. So one other thing to mention when you're categorizing, especially when you're in here the first time and you might have a lot of transactions, or at any time, remember how I said previously that everything is set up to be like a spreadsheet, and I could click these descriptions or the date or the pay. So when I'm looking for things and I'm adding things, it can simplify this initial process by clicking this description, which is really bizarre that some of them don't have a description, and grouping together these descriptions because they're probably going to be the same thing. Not all the time, but most of the time, they're going to be a very similar category. So if I look at a rental as an example, and I want to say this is equipment rental. I think I had that option. Yeah. Well, to complicate my life, I have 2 different equipment rentals. So that's awesome. But if I choose one that I think is the most appropriate, right? And I say add, you will notice that a rental here has now switched both of these to equipment rental. It's because I said this should be equipment rental. If I were to change the next one to something else, it's going to change the other one to that. The third thing that's going to happen is I have now said equipment rental is correct. You get this pop up. This is where I say danger, warning, warning, warning. These are rules. I've referred to them a few times as a very positive thing. I have not really discussed them as a horrendously negative thing, but they can be. And it's one of those, if you know what you're doing, you confidently use these and test these, then yes, they can be the best friend. If you don't know what you're doing and you don't test these, they can be your worst nightmare to the tune of millions of dollars going into accounts that you have no idea how they got there. That's always the when someone says, I'm trying to get funding, they told me I need to clean up my balance sheet or my profit and loss, like something's wrong with them, help me. These things are going there and I don't know how. The first thing I say is rules. You have rules and they're auto confirming. So this is what it's trying to do right here. If you do the same transaction or the same thing twice in a row, QuickBooks is going to default and ask you this. I always say at the very beginning, when you don't know what you're doing, say no. And that will stop this pop-up from happening. If I was to say yes, I will get this option. Now, in the newer versions of QuickBooks, this little guy right here is the problem that I'm referring to when I say it just did it and I have no idea what it did. Always, 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 always turn off the confirm automatically, because then you have the opportunity to still see it coming into your bank feed. If you have this on, you will never see it. It will go through the bank feed like it was never even there. It will be in your bank register and you will not catch it, see it, or understand that anything's happening until you reconcile. I can also attest to a lot of businesses don't do reconciliation and they don't pull a report until it's needed. And they have no idea that what was happening happened. And it's so easy to just skip past that and create the rule and do this to yourself, especially in the beginning. So that's my caution with the rule. Right now, this is just categorizing into the same category. If I wanted to say who the vendor was at the same time, I could do that. If I really want to dive in and edit the rule, I don't think it's going to let me. You can go as far as to say what the description is, if it's matching exactly, if it's money coming in, if it's money going out. You can also specify any particular tags that something should have. I think I upset the system. I'm not frozen, am I?
No, you're not.
Okay, good. That pop-up would have looked a lot different and had a lot more options. But we are now 5 minutes from the end. So I will leave this time for discussion, questions. I know that was a ton of information and a lot to process, but if you have any questions right now that you've already thought of, please unmute yourself and ask them. That's why I'm here.
I just want to say it was very, very informative. I've learned a lot. So thank you so very much for taking the time to properly explain all this and, just give an introduction to it as well.
Sure. You're welcome. I'm glad I could help. I had a question pop up in the chat that says, what do you do with a cell phone bill that's both personal and business? So a lot of times with that, especially like if you have a home office too, and you have a business office, you start talking about things in percentages. So what percentage of the time are you typically on your phone for personal versus business? And that's probably how you're going to allocate a business expense of that nature. Same would be if you are using your personal vehicle and you're not tracking mileage and you want to say that, the expenses pertaining to the vehicle are business. Well, you're not driving that vehicle 100% of the time. Maybe you are. But if you're not driving 100% time for the business, then yes, you want to break that down. And transactions can be split to exclude a percentage is the next thing. Yes, yes, yes. So there is a split in every transaction. So if the business is going to pay the cell phone bill, right? We can split the actual cell phone bill into a expense for the business and an owner's pay. And that way we can break out what portion of that was really for us personally, or what part was the business. Great. Next, I know somebody else had.
If owner's pay or owner's draw doesn't show up as an expense and is dropped down into the equity category, does that not, in essence, overinflate the apparent profit of the business? And, if we're just reviewing a P&L and they've done that, we don't see that expense. It looks like the business is more profitable than they are, does it not? And does that create problems from a lender looking at things?
It will make the company look more profitable than it is, but remember the secondary report is going to be the balance sheet, right? And that's where you're going to see how much money is being paid to the owner, which is in turn, long-term, going to affect your retained earnings as a business, which is your profitability over time, right? So that's where those two reports definitely come into play with this, but it is common practice for small business owners to be paid with equity because yes, we don't want to affect the profitability of the company with what we're paying ourselves because it's the value of the company to us, right? We can deflate the value because we pay ourselves a lot, or we can retain the value in there if we want to. And that will affect what.
Awesome. Are there any more questions out there for Christy? If not, everybody that's on the call, if you have a business development specialist in your area from Community Ventures and you have more questions about your QuickBooks or whatever, please get with them. Give them the questions and ask. Also, there will be another session next week. I think everybody that's on has seen that one. Or if you haven't, get with your business development specialist in your area with Community Ventures, or just you can email me, Lou Whalen, at Community Ventures. My email is lwhalen@cv.org, and I'll be glad to get you with your representative or answer the question. Okay. Thank you, Christy.
Yeah. Thank you, everyone. Bye-bye. Have a wonderful day.
Thank you. Good presentation.
Thank you.